All right, we are live for another Thursday's Top Tips in Real Estate here on the Arrow Title Services page. And every week we come on here live and share with you guys a new topic in real estate, and local realtors and lenders come on to share their big brains with you guys. This is our first one of the year, and it is such a juicy topic. We always have good topics though, but I'm excited to talk about it. Today is who's paying what? And fees explained. So we all know that there are a bunch of numbers here in real estate. A lot of them can be very confusing, and we want you guys to be as clear as day when it comes to knowing what those fees are and just understanding what you're paying for at the end of the day. So we have a very good conversation coming up today. I'm excited for this to be our launch of the new year with 2021. And I hope you guys are too. You guys can always rewatch our videos on the Arrow Title Services YouTube channel, as well as you can reach out to any of the amazing professionals on here. Their information is in the description of this video. So make sure you reach out to them if you have any other questions about anything real estate related or the latter. So we hope that you guys are having a great 2021 so far, and we're going to get this conversation started. So who's paying what? Fees explained. Jessica, start us off.
Awesome. Hi, everybody. My name is Jessica Taylor of the Jessica Taylor Group, powered by EXP. So I'm not going to go too deep into it because me, as a real estate professional, I always say, you know what? We have to get our lender into this conversation because we need to tag team this. This is not a one-on-one thing. This is a whole team thing here. So, oops, I'm breaking stuff. So one thing that I do like to point out to both my buyers and my sellers, there's no such thing as free. There's no such thing as, the buyer doesn't pay anything. The buyer doesn't pay my commission. The seller pays my commission and blah, blah, blah. While yes, that may be true for the most part, we have to be very, very careful with our words because the buyers will go in there thinking, oh, well, we don't have to pay anything except for the house. Well, that's where the closing costs come. And that is when that conversation with your lender, me as your realtor, and whoever is purchasing the home will need to sit down and go over that closing disclosure because that is a beast. You know, I sat in my grad school class in a finance course, and we did a whole bunch of closing disclosures and financial statements. And for me, it was just like, okay, I'm so over this. So, and that's for somebody that's like in it, like every single day. So imagine a first-time buyer, you know, they really have to be handheld to walk through the whole process. So usually, yes, the seller does pay the commissions, but then there's other things that the buyer can do to help prepare, help streamline the process. I've been suggesting to my buyers that they have their own appraiser available immediately and their own inspector available immediately as well, just to go ahead and pay that cost right off the bat once they've chosen the house. But then I've also told one of my sellers the other day that if they want to just have a very quick and easy, smooth process, have a pre-listing appraisal done. So that way they can already say, this is the number, this is what I want for it, and this is the fair price. So there'll be less negotiations with that. But again, everything is usually negotiable, but then also, again, it depends on like the time of the year. So that's how I'll kick this off. But again, it is a conversation with you and the team. You, your lender, your realtor, and your title person need to all come together and really go over that closing disclosure.
Awesome. Great advice, Jessica. And I like how you started that conversation off for us. I think that that's very valuable. And I think a lot of people don't know as well that, you know, a lot of times it is the seller paying for those commissions. So a lot of times buyers don't think of that. When they think to purchase with a realtor and everything like that, they think that they're paying those fees. And I think that's one of those misconceptions to really bring up. But as you said, nothing's free. You're not just going to get a house and, you know, that's it. So
Right.
Great start to the conversation. All right, let's go to our next, which is Katey. What do you have for us today?
Hey, can you see my screen?
Yes.
Super. Awesome. So great job. So far, so good. Hey, when we're talking to the buyer, when we get started, we go through a buyer consultation folder, and in there we talk about what happens during the process with money. And I will leave the loan information to the lenders. We like to stay in our lane. We'll talk about what's on the contract. So on the screen here, you'll see your escrow deposit. That's going to come out of pocket before you do anything. You're going to need to make an offer, and you're going to need to also put a deposit down immediately to hold that property so you can start doing your inspections, which will come out of your pocket. And then when we move forward after the inspection period, we then go into, or the lenders will order the appraisal for the property. Now we're talking specifically from the buyer's side. The lender will order the appraisal, and correct me if I'm wrong, lenders, when we get a chance, that the appraisal is an out-of-pocket cost during the process up front, can be put on a credit card or whatever. And then there could be a loan application. So this is money coming out of your pocket before you even get to the closing table. Then if you are working with a property, or you're purchasing a property that is in a homeowners association or a condo association, there is going to be an application process. And guess what? More money. You're probably looking at individual application fees for each owner, adult owner in some cases. It could be, as I've seen, as less as $25 and as high as $250 for an application to be approved in order for you to purchase that property. Moving on through the transaction, you're definitely going to, unless you're buying with cash and you don't want homeowners insurance, which would be crazy, you will also need to purchase and secure a homeowner's insurance policy to protect that property. And then as a negotiable instrument, as part of the negotiations of that contract, the purchase contract, I'll let Lucie talk about title insurance. So that's paid at closing. It's not necessarily something that comes out of pocket. Homeowners insurance, going back to that real quickly, that does come out of pocket. And I'll let the lenders talk about whether or not and how much might be held in escrow with taxes and insurance for that property when you're getting a mortgage for the purchase. So that's a lot of information all at once, but these are the most frequently confused or questioned portions of the transaction process where there's money flying out of the pocket left and right. And let me add too, once you get to the closing table, you are not done yet. So you're going to have movers, you're going to have utilities and probably deposits that need to be put to get those utilities turned on, water, electric. And also if you have landscaping or a pool, you're going to have to initiate those services too. So there are a lot of things to consider. Please get and listen to the advice of your local real estate expert to help you through the process. We do this every day. Lean on us with your questions. Again, Katey Bourgeois with the Bourgeois Real Estate Group.
Thank you, Katey. Great information as always. Another great addition to the conversation. And it's getting juicy, guys. There's lots of fees to talk about. All right, Alannah, go ahead. What do you have to throw at us today?
Hey everybody, Alannah Ghazel with eXp Realty. I love this conversation. I think it's an awesome way to kick off the year, Lucie. I think that's really sharp of you to do that. So far, the other agents have presented exactly the right things and exactly the things I'm going to reiterate. There is one note that I wanted to add, though, just to make sure to drill it home for our viewers. Just about almost everything that you need to be, putting money into on either side of a transaction is negotiable in the state of Florida. So keep in mind that anything that seems like it's too big to chew on, bring it to your professional team, because we work it all the time. Like Katey said, that we do this every day. A couple of the things that are absolutely standard, though, that for some reason some buyers are still surprised when it becomes part of the conversation. You need to have something to put down as an escrow deposit, especially as a buyer. Your seller needs to know that you're serious, and what you have managed to save up to this point is an indication of the kind of buyer you're going to be. So make sure to strategize with your professional partners so that you put out a really good offer, the best that you can do for your situation. That's really important. And being prepared to take on, the different types of homes are different. If you got an older home, you're paying for more facets of that inspection just to make sure to cover your butt. If your home's not over a certain age, you might not need a 4-point. If your home has a pool, just because you can opt out of paying for that inspection does not mean that you should, or that it's going to save you more money in the long run. So those are great conversations, depending on what you're looking for, to ask your professional, what is the best practice to make sure to protect myself and make sure I know exactly what I'm buying, so that we can push you in the right direction and connect you with the right people who we already do business with. So aside from those couple of things, almost everything else that I've experienced is a negotiable price point. The appraisals, you know, by all means, I want to hear what the lenders and title company has to say, because I want to know. I haven't experienced a case where that's become an inhibitor. You know, is it built into financing? Does it have to be paid up front? Those are the perfect questions to ask the professionals that you pull into your team. So I'm just going to wrap it up with that. I want to hear what they have to say too.
Thank you, Alannah. Great addition. And while that's still fresh in people's minds, I'll actually throw in, yes, a lot of things are negotiable in the process, but the one thing that isn't is the title insurance policy itself, because that is state regulated through Florida. So that is something that is completely dependent on the price of the home. However much the price of the home is it's a calculation that is done and state regulated. So while it's fresh in people's minds, but a lot of the process is negotiable. So who's paying for title, on the other hand, whether it be buyer or seller, is a negotiable factor. So that's just a little bit of title insurance, but I'll get a little bit more into that later after we talk to the lenders, because the lenders are another big part of this process. And like Jessica had mentioned earlier, it really is about having that core team with you. Your real estate professional will help you with those numbers on that end, your mortgage professional and your title. We all come together to make it a big old pot of great stuff, you know. All right, so we're going to start with Peggy. Peggy, why don't you start us off on the mortgage side and what those fees and who's paying what?
Oh yeah, this is Peggy Hornick with East Coast Mortgage Lenders, and I love this discussion because I work with buyers every day that are surprised, and I do have to say kudos to Katey for having a buyer package that she gives her buyers, because a prepared buyer is a happy buyer. And when they come to me, they're not surprised at closing costs. You would be surprised at how many people and buyers don't realize that there's closing costs on top of the down payment. So I want to address the appraisal because that was mentioned, and the buyer cannot get an appraisal ahead of time because every lender has to order the appraisal through a non-interested party, which is the appraisal management company, and it has to be completely non-steering, which means that I cannot choose the appraiser. So that appraisal has to be ordered through the lender, through a non-interested third-party appraisal management company, and that fee gets added to the closing costs. Now, East Coast Mortgage, I do not charge an upfront application fee. So I don't get paid on any of my services until the loan closing, unless it's the appraisal. And if the borrower cancels the transaction, then they have to pay for the appraisal. I usually get a credit card information up front, and I don't charge it unless the loan file cancels. But there are some lenders that do charge an upfront application fee to pay for things like a credit report and the appraisal. So just be aware of that. Also, in our state of Florida, our state has one of the highest closing costs of any of the states in the United States. And the reason for that is because Florida does not have state income tax. And so the way our state gets revenue is through the taxes that we collect for real estate transactions, through the intangible tax and then the doc stamps on the mortgage and the deed. So that adds up to the closing cost. Another thing that borrowers have a misconception are, because there are some lenders that advertise no-cost loans. There is no such thing as a no-cost loan. What is happening in that situation is that a lot of times the cost of the loan are built into the interest rate. So the interest rate that you're paying is higher on a no-cost loan than it would be just for a regular loan where there's the normal charges. So as a lender, I can price out the interest rate in all different ways. 99.9% of my buyers want a rate that has no additional origination fees attached to it. Because with these low interest rates in this environment right now, there's no reason to pay points or origination fees to buy down a lower interest rate, because the interest rates are already low. And it would take 3-5 years to recoup the upfront cost that it would take to buy down a lower interest rate. So usually when I quote a rate, it just is a no point interest rate. And then we can go from there. On an FHA loan, if the buyer needs some help with closing cost, I can have the ability to offer a lender credit. But again, that credit is coming from a little bit of a higher interest rate. As far as the title fees, I look at the contract. That's the negotiation part that Alannah and Jessica and Katey all touched base on. And that is what really gears me to doing the fee worksheet and the loan estimate and all of the estimate for the title charges. And you guys all do a great job of making sure that the contracts are very clear on that. Let's see, I think that I have touched on everything. However, there is one thing, when you're buying new construction from a builder, a lot of builders throw in incentives to use their in-house mortgage company. I've had a lot of people come to me because what's happening again, there's no free stuff. So what the builders are doing are increasing that interest rate to allow incentives to make the deal look better. But in the long run, if that buyer is staying in the house for a while, you'd rather have the lower interest rate because that pays off much better in time. So go with your local lender that partners with your realtor so that everybody is in sync, and the title company, we all work together as a team. And this is a great topic. I'm so excited about it because I love numbers. That's it from me, Peggy Hornick with East Coast Mortgage Lenders.
Thank you, Peggy. Yes, that was great information. Honestly, you touched on a lot, and definitely such a great thing to mention about the new construction, especially because new construction is so big right now in our area. And a lot of people don't know that, you know, when they see free this, free that, and they think that they're getting a deal, and it's like, okay, you really have to dig deep into those numbers and understand where everything is coming from, because nothing's free. Everything's coming from somewhere. If it says free here, it's not free on this side. So just having a local professional that's going to walk you through that and explain to you what that means is the world. And I know that any of the local professionals on here, they'll sit down with you. If you already have something that you have like put together and you're confused about fees, they will reach out to you, or you can reach out to them, and they will explain to you like what that, break it down for you. So I know any of the professionals would do that for anybody. So thank you, Peggy, for bringing that up and adding to the conversation. And I'm excited to hear what Eric has to add as well with the value. So yeah, Eric, take it away.
Awesome. Eric Rosberg with Cross Country Mortgage. And Lucie, this is a testament to the group of professionals that you've put together. Everybody, the checklist, everything I had prepared, you guys nailed it. So great stuff. Just kind of to piggyback a little bit on what Peggy said, the only fee that we charge up front is going to be the appraisal fee. Just keep in mind, the appraisal fee is going to change based on the type of property that you're looking at. If it's a multifamily, if it's an investment property that we're using income, so that fee is going to vary. It can be anywhere from $450 to up to $800 if it's like a 4-unit. What else do we have? A lot of people think that they actually have to come up with the 20% down. And this is, Katey brought up a good point. This isn't so much lending, but you have to consider the expenses after you purchase the property. It's the average is about $11,000 to $12,000 within the first 12 months that you're going to spend on the property. That could be a washer. It could be anything that you're putting in. So when I interview somebody, we talk about that. How much money do you have? Because you always want a little cushion. Speaking of cushions, in your escrow, if you are escrowing your taxes and your insurance, which most people, Peggy, I think you nod your head, most people do. You actually get a little bit better interest rate by doing so. In that escrow, there's going to be a cushion. It can be anywhere from 2 to 5 months, depending on when the closing time is. And that money is set aside in the event that the taxes increase or the insurance increases year over year to protect yourself from coming up with a big check in November when your insurance is due. Origination fees. That is, Peggy brought that up as well. That is something that you, when you're shopping for a mortgage, you want to be very aware of. There are certain places that will advertise. You can go on the internet and you'll see a very, very attractive rate. However, they'll say charging lender fees, charging half a point. Sometimes I'm actually in the middle of a loan right now where it made sense. A quarter point brought the rate down. The individual is staying in the property for a very long time. So talk with your lender about that to see if it makes sense in the long run. Sometimes it is 3 to 5 years before that break-even period. Guys, that's all I got. You guys nailed it.
Awesome, Eric. Thank you so much. And yeah, honestly, everybody always comes with their best knowledge on here. It's always so great. I do want to throw in a little bit about title because it is part of the whole aspect, and then we'll get into a little discussion and see if anybody has anything to add after hearing everybody speak. I'm going to share my screen very quickly. All right. So you guys can see my screen now, and this is actually, we have a app in which people can utilize to find quotes for. This is for actually mortgage, anyone who is in mortgage or title, or mortgage or realtors. But on our website itself, arrowtitlesvcs.com, the client themselves, if you are looking at purchasing a home or refinancing, whatever it might be, you can actually get a quick little instant quote right on our website. But this is just a little bit bigger aspect. So let's say you're just throwing in a property address and sales price, loan amount, type of transaction, purchasing with financing. Again, the negotiable aspect that we talked about earlier. It could be whether it's buyer only, seller only in regards to paying for title insurance, or you could even do a 50-50 split in some cases. So those 3 options are available to be able to look at what that's going to look like, and you can go and edit between. But let's say seller's paying for the title insurance, and it calculates and it breaks it down for you, buyer pays, seller pays. Now, this does not have the fees of the mortgage professional, if a mortgage professional is involved, because of course that could depend completely on them, whoever they are. So this is just our fees and the fees that are going to be according to a normal transaction, and these can fluctuate as well depending on your transaction. For instance, you see we have our closing fee, the owner's title insurance. This is something that is going to protect the buyer themselves, non-negotiable. If you're getting owner's title insurance, you can't negotiate this price any lower. No matter where you go, it's going to be the same for however much the house is being sold for. Then there's the lender's title insurance, which is protecting the lender, that is going to be required by the lender. And then there is a survey fee. If we need a survey to be ordered, that's, a charge that's going to be on there. If there's a current survey that we can utilize, then we will do that, but there will be the survey involved. If applicable, as you can see against the things that, depending on where you are, you may need a lien search for the property. If you are in St. Lucie County, you could need a lien search, and then we're going to have to order one of those from the county because they attach liens to the property and they attached to the property themselves. So you don't want those liens to follow you into that home. If we didn't do that and you ended up having to take over those, if you don't get that lien search, then you're messing yourself up if you end up doing it like on your own without any professionals, which a lot of times people can do and do, but like that's a whole nother thing. That's a whole other can of worms. Then there is the HOA and condo estoppel fees, which if you're going into a homeowners association, that is a fee that's going to be dependent on what they charge. We put a rate of what it usually is at around, under, but it could depend just on the association that you're going for. Again, this is a title quote, not a guarantee. But yeah, and then our title search fee. And all of these at the bottom as well are all in. You cannot negotiate these: the mortgage recording fee, the deed recording fee, the intangible taxes. These are all state regulated fees or county regulated fees, and they are going to be on there, and it breaks it down who's paying for what. The seller's always going to pay the doc stamps in most cases. And the buyer's always going to pay. So it breaks it down, and depending on how whoever's paying for what, it'll break that down with you. Again, this is with the seller paying for title. So I just want to kind of run through that very quickly. Talked pretty fast, sorry about that. But yeah, there are a lot of fees that can go into it, and we break those down for you guys if you guys ever need any help with that, of course, because that is something that we want to do. But at the end of the day, you need all of the fees that are going to be in place, whether there are commissions for the realtors or what the fees are from the mortgage lenders as well. So all of those would be in what Jessica mentioned earlier, the closing disclosure, which is something that you get a little bit more towards closing. So good stuff. I'm glad that we started off the year with this. Does anybody have anything to add with the discussion? We kind of, everybody said their piece, but is there something last minute? Oh, Eric, go ahead.
There we go. So Alannah had brought up a good point. A lot of stuff is negotiable in the transaction. One thing that I see quite often is, instead of negotiating down in the sales price, is sometimes, and it's tough in this market, is getting a seller concession, because the topic today is who pays for what. Sometimes you can get the seller to pay. Sometimes, as Peggy said, we can do a lender credit. Again, that's a little increase, little bump in the interest rate. But I just wanted to throw that in, that sometimes the seller can pay some of those closing costs.
And it completely depends on the industry in which you're in. And as we've talked about in previous previous years, I mean, I guess technically, but in previous episodes, we've talked about how crazy our market is right now. And on our market update Monday, we actually said, oh, it's a new year, but is it a new market? And no, it's not. It's not a new market. It is still insane. Things are still, I was just on the Realtors Association today, and in St. Lucie County, supply is still at 1.9 months, which is insanely crazy, and the inventory is very low. But there are so many different scenarios, and that's why it's important to speak with your local real estate professional, because they will be able to tell you what you can and cannot do and figure out what's going to be the best situation, because our market could be changing this year, and it'll be exciting to see, you know, with these videos we can always look back and see, oh, how crazy were things then, or how are things slowing down, whatever it might be. So that's why I love that we come on here every week and we're kind of updating you guys as it goes along with any updates in the mortgage industry. We've had a couple of those in the past month or so, with those rates change, or not the rates, but the change in amounts that you can get for loan, right? Anyways, that's a whole nother thing. You guys can rewatch other videos for that. But I thank you guys. Does anybody else have anything else? Jessica, did you have something to add? Go ahead.
Oh yeah, I just wanted to pop on and talk about new construction, just super quick, because that's one of my main niches. And like a couple people mentioned that, yes, they have their own lenders, and it's great. All those numbers look beautiful. They look great, but you know what? You really got to look at that teeny tiny fine print and see what you're really paying for. So I always suggest to all of my clients, go new construction, especially with this crazy market. It's amazing, but still go interview other mortgage lenders, because you might get a even better rate, you know, for the long term, you know, than what the buyers lenders are offering. So always interview more than one lender, especially if you're going to go new construction.
Absolutely. And to something that, are you going to talk about new construction, Katey, or no?
I was going to make a point about, yes.
Go ahead. Then I don't want to steal your point if that's what you're going to make.
No, to Jessica's point, you know, the builders have a different way of doing things in new construction. They also have a different contract. So we've talked a lot about the as-is contract for purchase and sale. That is the agreement that we use to transfer properties every day. 99.9% of every transaction is on this So 2 different contracts. And the other thing I want to say is that in this contract, read it, it says who pays what. And the negotiable instrument here is title insurance. Just want to make that point. But that's
Yes.
not the case with builders. You've got to read. I hope all the realtors read those contracts, that as a realtor, you're representing a buyer going in and talking to a construction company or a new home builder in our area. Read that contract, get a copy of it in advance if you can, so that you know going in what the buyer is going to be paying for. It looks like it's free or included. These fees that we're talking about could definitely be snuck in there. I love that Jessica said nothing's free. There's nothing free.
Yes.
Right.
So
Can
true.
I
The money's
piggyback
got to
on
come from
that?
somewhere.
Oh,
Yes.
yeah.
Peggy, give me 2 seconds, because 1 second, I want to mention before I forget it, because I have such a bad memory when it comes to things like that. I'll be like, oh yeah, this is a great idea. But I saw Jessica post about this on her page the other day, which, by the way, guys, if you guys are watching live, follow these amazing local professionals on their Facebook pages, which are in the description of this video, because they are always posting great information all the time. So it's just great to be tuned into that, whether you're buying, selling, or not. But with inspections, a lot of people, okay, let's say you're buying a new home, or not a new home, but like a resale home. A lot of people are like, oh, I'll get new construction. I don't need to get an inspection. I don't need to do that. Nope, wrong. Jessica had mentioned in one of her videos that you still want to get an inspection, because people aren't perfect. Things can still go wrong. Just because it's brand new doesn't mean it's fault proof. So I wanted to bring that up because Jessica was the one who actually I remember that she had that video. So
Yes, definitely. Everybody get an inspection. We need those.
Yes.
Yeah.
Absolutely.
Just because you don't have to doesn't mean it serves you well to skip paying that. It doesn't
Exactly.
really save you money.
Exactly. No, it can save you money in the long run. And a lot of people, when they're penny pinching and trying to get that home at the end of the day, and they're like, oh, but I could use this $200 on steak. I don't know what they do. Like, no, how about you make sure that one of the biggest investments of your future is going to be the investment that you think it is. So Peggy, go ahead with what you were going to add and want to.
Yes, and just a quick point about what Katey brought up about those builder contracts. They are probably like 25 pages. It's very hard to find the sales price in there when you're looking at it. And a lot of times when the home buyer is adding on extras, and the sales price is always changing. But one thing that I have seen, and I don't want to bash builders because we need them to build our new homes, is sometimes the builder will pass along the impact fees for the real estate taxes on to the home buyer. And that can be $5,000 extra dollars or $10,000 extra dollars. So be aware of that as a buyer when you're going into the sales office. Make sure you ask who's paying the impact fees to this property. Is it passed on to the buyer, or is the builder paying for it? And then also just make sure that you get the total sales price with all the upgrades that you've chosen, because that keeps changing. And I know as a title officer, Lucy, that's hard for you to follow that bouncing ball of which is the complete final sales price. I've had that happen many times.
Yes, no, what a great point to bring up. And just being very diligent when you're going, as Alannah said, most things are negotiable. And when you're in that aspect, they're trying to negotiate right back with you, when you're trying to purchase a new home. But yes, new construction is amazing. They are building up so much here in our local area along the Treasure Coast. And it's definitely an option to look into, but just be very, in any situation, be very wary of just all of the fees that are involved. Don't overlook things. Don't just say, oh, they sounded nice and it's good. You really want to be able to protect yourself at the end of the day and make sure you understand what you're paying for, who's paying what, because that's the topic today. Does anybody else have any last things to add before we go on to the next section, which is the Thursday's top tip of the week? No? All righty, that was a great discussion, guys. If you are just tuning in right now, we just had an amazing discussion about who's paying what, fees explained in real estate. and just a brief overview of just all of the things that you can really get into and why working with local professionals is so important in our industry, and how we all kind of get pieced together when it comes to title, mortgage, realtor, and how we're all helping you to make sure that you guys understand what you're purchasing at the end of the day and who's paying what. So if you guys are tuning in just now, make sure you rewatch that. You guys can always rewatch these videos and our previous weeks on our Aero Title Services Facebook page and YouTube channel. And you can always reach out to the local professionals who are on here and reach out to them with any questions that you may have about real estate. So we are going to go on to the next section, which is Thursday's top tip of the week, because this is Thursday's top tips in real estate. And then there will be the announcement section afterwards. So make sure you guys are staying tuned, because there's always some great announcements that these local professionals have for you guys. So top tip of the week, Jessica, what is it?
All right, so new year, same tips. Build your team. Build a team. That's what I always stress, and I can't stress it enough. This real estate game is not a one-person thing. You need to find your realtor, your mortgage broker or a mortgage lender, your title officer, your inspector, your appraiser, your credit repair specialist, your lawyer. This whole thing takes a team, okay? So I always say, build your team towards your real estate goal success. That's my tip.
Love it. What a great tip. Great way to start off 2021. All right, Katey, what's your top tip of the week?
Katey Bourgeois with the Bourgeois Real Estate Group. So we have those resources. We help you build a team because we're working with them. So great tip, Jessica. Absolutely. I would say that my top tip, same thing, moving forward into a new year, same great information here. Please work with your local expert and ask them about their credentials. Ask them how many homes they've sold recently, successfully, whether you're looking to sell your property or to purchase a property. Are they active in the market? You know, you don't necessarily want to buy a home with somebody who hasn't written a contract before. So if they're working with a team, get with that team leader, and they can be part of the process, but go with somebody who's an expert in what's happening in the market right now and is successful in the business. And watch your money, get your money right.
Love it. Thank you, Katey. Great tip. Great tip. Alannah, what's your top tip of the week? You're muted.
You know, the self muting serves its purpose occasionally. Alannah Ghazel, eXp Realty. My top tip, I think this week I'm going to throw out there, share your fears, share your goals. It all breaks down to communicating, because if your team, that we've already talked how important that is, if they know exactly what matters to you and exactly what doesn't, they're going to be in the best position possible to make sure that you're set up for success throughout your whole transaction, regardless of which side of the aisle you're on. So that would be my top tip.
That's a great top tip. Thank you, Alannah. All right, let's go to the mortgage side of things. Peggy, what's your top tip of the week?
Well, my top tip is always the same. Make sure you get pre-approved before you even look at any houses, because it is so important. And give your lender, your local lender, your pay stubs, your tax returns. We're going to need to see those before we can issue a pre-approval. It's not that we want to get all up in your business, but I need to make sure that the buyer meets the guidelines. Pay stubs are really important to review. And it just seems like it's so simple, but a lot of people give me verbal income information, and then I look at their pay stub and it's nothing like the verbal. So it's really important. I'm sure Eric does that same exact thing. Make sure that the buyer is well qualified and has that hard evidence of pay stubs to do a pre-approval, and that will make your transaction so much easier. You don't want to pay for inspections and then find out that you can't get the loan. So very important to get a pre-approval a month, 2 months before you're ready to buy.
Absolutely. And don't lie.
Yes. Don't inflate your income. It won't work. It won't work. We find out everything.
They find out everything. They
The
find out
truth
about it
will
all.
come out.
Yeah,
Yes,
they know where the skeletons lie. Eric, what is your top tip of the week?
Yeah, if you have a business in Alaska, we're going to find out. So you can't hide anything. You can't hide anything from Peggy and myself. My top tip is create a budget for yourself. Know what you're comfortable. Just because Peggy and I say you're pre-approved for a $400,000 house, that might not mean that fits your goals, your lifestyle. You want a vacation. So sit down and be honest with yourself on paper, do a budget.
I love that. That's great. You don't have to get the max of what you're approved for, and not everybody can actually afford their max when it comes down to it with their lifestyle. So that's a great tip, Eric. Very great tip. My top tip of the week is going to be interviewing your professional in every regard, whether it be a realtor, mortgage lender, title, professional. So you can always take suggestions from people. You can always, I know that people love to use their friends. I get it. You have friends, you know nothing about real estate, and you have a friend, or maybe someone down the road mentioned someone to you. Great, interview them, but reach out to other people as well. Understand who's going to fit best with you and who's going to communicate with you, because there's not a one all end all be all. You want to make sure that the person that you're talking to, the person you get the best vibe from, that's going to communicate with you, which I'll tell you as anybody on this call right now. But just communication is so important in this process, and there's so many people that I speak with, and if one piece of that puzzle isn't communicating as well, it's like a clog in a pipe. So everybody can't do their job unless everyone is doing their job. So having the communication is so, so, so important, and making sure that you interview your local professional. So guys, that was the top tips of the week from these amazing local professionals. Again, you can always reach out to them on their pages, which are in the description of this video, and you can rewatch this video on YouTube. And we're going to go into the announcement section, because these amazing professionals always have great things coming up, and I'm excited to hear what they have, especially with the new year, 2021, what's coming up. Jessica, you got anything?
Yes, I do. Hi again, everybody. I am Jessica Taylor of the Jessica Taylor Group, powered by EXP, and I'm really excited this year to educate more buyers. So what I'm going to be doing is hosting first-time buyer seminars every 4th Wednesday of the month. All the information will be on my Facebook page, and we will most likely start streaming that on YouTube as well. But my main goal for this year and most of last year was to create educated buyers, because a smart buyer is your most favorite client. So I'm going to be creating lots of favorite clients and awesome people. So every 4th Wednesday of the month, it's going to be about 6:30 p.m. All information is coming on my Facebook page very soon, and registration will be open, and this is free. This will be free, but everything else, is not free. But this is going to be a free seminar for first-time buyers.
Love that. Great. Love that you're adding value in other ways. So it's always great. We add value on this every week, and it's great to see you taking that to another step. Katey, what do you have coming up?
Well, I just had something that came to mind. We're talking about, get your money right and who pays for what. Not necessarily an announcement, but maybe just a little tidbit that people like Eric and Peggy and some of the other lenders that have come on and shared information with you, they can read your credit matrix and get you ready. So I would say that, reach out to these people, and if you don't know if your money's right, get your money right by just, making a couple phone calls, and we can help you.
Yeah, that's a great tip. And a lot of people are afraid. They're like, I'm not ready right now. Okay, that's fine. They can help you get ready. They can help guide you in the right direction.
Maybe you are ready because you have a misconception about what it takes. So phone call.
Exactly. Great tip, Katey. Thank you. All right, Peggy, what do you got for us?
Okay, my tip is, can you hear me?
Yeah.
Okay, gotcha. Okay, so my hot tip is if you are renting, you can probably afford a house, because rents are so high right now, interest rates are so low that you can buy a house and probably pay less than you were renting. So it's a great time to buy. And to piggyback off of what Katey said, yeah, I can run your credit and tell you if there's any hurdles we need to get over before you buy. And a lot of times it'll just take 2 to 3 months to fix any issues. But again, most people are surprised that they can qualify because interest rates are so low. Your mortgage payment's going to be low. And that is my key. 2021 is going to still be a great year to buy a house, probably the best year, because rates are going to stay low. Keeping my fingers crossed for that. But yes, they're very low right now.
That's so true. And what people should remember at the end of the day is if you're renting, you're paying someone else's mortgage plus some. So
Yes.
just know that you're not just paying their mortgage, they're getting extra. Eric, do you have anything coming up and any announcements?
3. Super quick. FHA, we've talked about this, but I'm still excited about it. FHA loan limits up. Conventional loan limits up. Recently, jumbo loan interest rates down. So it's good all around. Exciting stuff out there, guys. Exciting stuff.
Really is. And we talked about that a little bit more in depth in one of our past videos. So people have to go check that out. That's awesome. Thanks, Eric. Always great information from you guys. If you guys are just tuning in live right now, make sure you guys rewatch this video because the information from these local professionals is invaluable and we can all learn so much just from it. We're in this every single day and we do this Thursday's Top Tips in Real Estate every week at 2 p.m. to help educate you guys and give you guys those little tidbits in the real estate industry. There's so much going on and we just want to make sure that we can guide you a little bit, make that light just a little bit brighter on the other side so it doesn't seem so murky. So make sure you guys rewatch it. Again, you can rewatch it on our Arrow Title Services YouTube channel. We hope you guys are having an amazing week and we will see you guys next week for Thursday's Top Tips in Real Estate with another topic and more amazing local professional knowledge. Thank you guys for joining. You have an amazing rest of your week and goodbye.